watching Master Trader Live. Simple market analysis and education to help you make money in the markets. Join us live each week on YouTube and see past episodes at Master Trader Live. And now your show hosts, Greg Capra and Dan Gibby.
Welcome, everybody. Wednesday, Dan and I are back, Master Trader Live. So we got another great hour of education to share with you. Today, we're going to be talking about trading the open. But the open isn't just for trading the open. It's the starting point for our day as day traders, and additionally, as swing traders or investors, because gaps create great opportunities. Because depending on the gap, either negative or positive, it creates the void that we talk about. But that void, in essence, is similar to like a wide range bar. It's a power move, especially if it's accompanied by a big expansion in volume. So it does open the potential for retracing into the void. And one of the things that we look for with gaps is for the gap actually not to be closed, which is kind of a fallacy that all gaps get closed. Maybe eventually they do. It could take years, but initially what we want to see from a gap, especially like an earnings gap, is that it does not get closed. And sometimes it might take, for an investor, a swing trader, I've seen where it could take a week or two of consolidating the gain from that gap or the negativity of it for there to be follow through. So, and again, many look at gaps as like, oh, here's a gap trade for me to trade in the next hour. And that's great if it sets up. But again, gaps create tremendous opportunities for trading in the afternoon, which I enjoy much more because, we have much more information to rely on and less stressful, in my opinion, as well as for swing trading over the next few days or weeks. And sometimes with the right market timing, could be for a few months. So let's get to it.
All right. Good afternoon. Greg, you left a blank in this title before leaving for what?
Well, I did that on purpose. I know it was in there.
I said golf.
For me and you, Dan, it could be go to the boat, go to the beach, go to lunch, whatever.
It's exactly right. And I'm also glad you added in this. I would have done it throughout the thing, which I will. But just because we're talking about trading the first hour, maybe 90 minutes up to the 11 a.m. reversal period, what we're going to teach you today is our approach, how to get ready to pull money out of the markets every day, whether you yourself only want to trade 1 hour and leave for the golf course, work, whatever, we don't care. We're teaching you how to be a 1 hour trader, or how to use the opening session to get into swing trades, or both. Maybe you take half your money in an hour and leave half for a swing trade. We'll talk about that. This is our slide we show every time for obvious reasons. This is our technical approach to trading anything that moves. We're price pattern traders. So these are just 9 beautiful ones. Another chart we show all the time. I used to tell students, no setup, no action. This is just the starting point. If you can't tell me what the pattern is, then I don't even want to have a conversation with you of whether it's quality or not. So we take that picture and then we overlay the other concepts that make up our total approach, which is, okay, where is this picture in the trend, support and resistance, multiple time frames analysis? Does that support the time frame that you're trading? Is it showing relative strength or weakness? Greg mentioned volume. Hey, am I going with the broader markets and sector, or am I fighting it for a day trade? Position and money management. And, we added psychology here because, and this was last Wednesday's MT Live. We got tons of positive emails from that because That's so important of a concept to doing anything, whether you want to learn to be an architect or basketball player or trader. But there's a lot of emotion in this because we're emotional beings. And again, that was last week's show.
All of that little drawings I put on there was to make the point that we call all of these bullet points concepts. In of themselves, they don't tell you to do anything. Right? So if you took any one of those concepts, what would you do with it? And this whole slide is about strategies, which incorporates putting not necessarily all of these, sometimes all of them encompass a strategy, but you have to take into consideration most of them to create a strategy. And that's another word for a trading plan. So that's the essence of this slide. Is the keys to success is how you learn all of these individually. This is how we present the courses, the learning process, to present each one of these individually till you understand them, and then put them together to create strategies.
Awesome. Here we go. And I think trading is one of the most amazingly interesting, challenging, and rewarding professions out there. I can take my little 15-inch Dell laptop anywhere in the world, and this is what we're going to show you today is our process of how to open up your laptop, internet connection, and search for opportunity in the market. So even though we're going to talk about how to do it at the market open and to prepare for it, it's really the same analysis. If I just wake up at 11 o'clock in the morning one day and I want to look for opportunity, or I went golf in the morning and I'm showing up at 2:30 in the afternoon. So that this is our approach to find opportunity and profit. So what routine are you going to use, whether you're a day or swing trader? Well, okay, step one, I'm going to review the broader markets and market internals to get a trading bias. What's my bias right now? If I have open positions, I put this right up there on the list because I call that my inventory. And I do that on purpose as an analogy to the manager at Nordstrom's selling clothes. He or she is just buying merchandise to sell them at a higher price, and the difference is your profit. We're doing the same when we buy and short anything that we're trading. So we're just using our approach to make money through inventory changing. So you don't need
Question. Let me just, got ahead of ourselves, but interesting question, Dan. I was asked on the social media there, how to tell how the market, this is how to know tomorrow. Please tell how to know tomorrow market upside or downside. That's like predicting the future, which to say whether it's going to be up or down tomorrow is a coin toss. However, if we were to say the market fell 5 days in a row into an area of major support, it would be reasonable to think there's the potential for a turning day, maybe upside. So we don't get into saying, hey, tomorrow the market's going to be up. And even if I said that, the next question you would be, well, how much? How do I make money from that? Where do I enter? Where do I stop? So even if you knew what it was going to do tomorrow, it didn't necessarily mean you'd make money from it because you could enter at the wrong time.
Well, just to add one bit of clarification of what you just said, because I do discuss a trading bias in the last 10 minutes of the day in the Master Trader Green Room. We did it yesterday, and my bias was lower today, but I didn't know what's going to happen overnight, the gap, etc. But the point I want to add to what you just said is it's noon. It's in the middle of the day. So we could give you a bias based on what the charts look like right now, but we have 4 more hours until we're looking at the daily chart to see how they close. So my bias is going to change, hour by hour. All right, so this is what we're going to get into now. So I have a bias. If I have opens, don't forget about your merchandise. And I call them tier 1 trades, which is simply means that think of the batter box. I'm always using analogies. A tier 1 to me is everything's working, multiple time frames, you got a bullish gap, or it's a buy setup, the markets are in alignment, relative strength. And then what we call a thumbnail is just a 5-minute chart. I use 6 screens here at home. I have a lot of real estate here. And so I'll put this chart, I'll put the tier 1 stock of interest in a 5-minute chart, set an alarm, and just to make sure that my bias is going to come to fruition within the first hour. Be aware of any economic reports, any pending news, obviously on your individual stock, but also on the broader markets. There's a link we use. I forget what it is, but just gives economic reports. Be aware of that. So we're getting you ready now for the market open. Okay, I have a bias. I have a tier 1 list. Morning day. So now you're a day trader. So some of this is review we just talked about. I have a bias. Semis are strong. Retail is weak. Okay, I got my watch list. And so I'm going to consider my entries based on the alarms triggering, if it's a daily chart or if it's a intraday day trade. Like I said, the pattern on the time frame that you're trading has to trigger, and the bias that I have before market open has to play out. So that's my game plan for trading the morning. And so we'll come back to this more, but we use TC2000 for scanning, and we have a couple of scan names here. Greg created all these, and I'm showing you these to find new opportunity. Like Greg, all the time he's giving me new ideas at the market open at 9:35. And I'm like, whoa, I'm focused on all my tier 1 trades, getting into them. But you could actually show up at 9:30 in the morning. You don't even need pre-market prep. You can see where the market's opening. And this is a phenomenal software for...
If you knew what all of those meant, which are based on what we teach.
Yeah.
Like I said, like that first one on the left there, a green WRB. If you're new to Master Trader, you'd be like, what the hell is that? Well, it's a wide range bar. It's a bullish wide range bar. And as commented a few minutes ago, one concept isn't a trading strategy. So what do you do with that bullish wide range bar? Well, how did it form? Is it at support and resistance? And putting that all together, then you know what to do with that scan. The scan all by itself isn't going to make you money. But if you know what it means, it puts you in the ballpark of knowing what to do with it.
Yeah. And so as soon as I settle down, because I'm busy at the open, alarms going off, my tier 1s, managing the opens, but whenever I free up, this is where I go. These are some of my favorites to look for new opportunity. And so this one here says gap up on volume. So sure, particularly if it didn't have a lot of volume pre-market, but 90% of the time, I already know which one of these that are on my hit list because I saw the gap pre-market or the night before because of earnings or something. So Greg, tell them what you do with this. This is one of your slides.
Yeah, so this software I think is amazing. And I can appreciate this software because when I started out, software was pretty rudimentary. And well, the initial stuff couldn't even do anything like this. But eventually, software packages were like, well, here are charts of sectors. And what you had to do was go to some website that would have the stocks that were in that particular sector. These are all ETFs. So for our ETF letter, I look at a page like this and I can quickly look at 20 or 30 ETFs to see if there's an opportunity in that particular ETF. Now, once I do that, well, now I can go and look at, see if it shows here. Yeah. So here, XLF. I'm just taking, for example, if I like the pattern on there or any one of these, I would click those little lines and it would bring up a box with all the stocks that are in there. And then I would look at a chart where, maybe daily, weekly of those particular stocks and see about trading opportunities, whether it's a credit spread or a debit spread or calls or puts or buying or shorting or whatever.
Yeah.
So years ago, you had to go and create a list and you type in all the symbols and then you'd put them into a folder, and it was a lot of work. So today, all of this stuff is like press a button and it's there for you. So I equate any software package as being a tool. Now, how do you use the tool? When do you use the tool? There are various tools. And this is one of the ways that using it, thumbnails, and we make thumbnails. I have thumbnails of, I don't know, a couple of hundred different stocks that I flip through the thumbnails that aren't in a scan, but I just like to look at the charts and I look like, hey, there's a breakdown. There's a breakout failure. Some pattern that tells me here's an opportunity to focus on. So this is a way of us reducing the factory work, so to speak. Just bring up a page, look at the charts, pretty quick. That one's in an uptrend, that's in an uptrend, that one's sideways, maybe it's a breakout, there's a breakdown failure, there's a void above. All of this stuff coming together that you can, in a matter of a second or two, say, I like that one, I don't like that one.
And Greg, to give you a compliment and to illustrate the power of everything you've been saying over the last couple of minutes, I've known you 25 years. Implementing what you just said, if I said, hey, Greg, give me a trade, please, you can find me trade opportunity doing what you just said within 10 seconds. Within 10 seconds, Greg can find me a compelling setup. And that's what we're teaching you here today, is to find opportunity to trade at the market open. All right, let's continue. So just the concept of relative strength here. We use the term sometimes, it's on its own page, and this one was actually pre-market here. Look at the times, pre-market. So we had a bullish gap in the Qs. I'm not showing you the daily charts, I'm showing you the concept of relative strength, because that's an important subject of trading the market open. We want the best patterns showing relative strength. So the Qs were bullish. I don't know what got them up, it doesn't matter. And so that was at 6 in the morning, and now we're coming into the market open. Uh-oh, this thing into the market open at 9:30 Eastern sold off. Still could be bullish. It filled half the gap, and I don't know what the daily looks like. Look what AMD did. Bullish gap, bullish consolidation into the 20-period moving average pre-market, stayed in the upper 40% of this range. And why the Qs are falling, this thing's ripping pre-market. So I would say it's very rare, but very rare, or you can trade pre-market. I mean, ignore that this is the pre-market. That's a bullish setup with a bullish gap. We're going to talk about gaps right now. But even if you didn't trade it pre-market, which is totally fine, this would be on my tier 1 hit list for the market open to trade in the first hour.
First few minutes with that pattern.
Right. But what I'm saying, right. What I'm
This
saying,
is a 15-minute chart, but
no, right.
this is a fantastic example because the liquidity there is great. It's a very active stock, which is
Right.
important because not all pre-market data looks like this. Because this doesn't even look like pre-market. Sometimes you look at pre-market information,
Right.
it's dots and whatever.
Right.
This is a beautifully formed chart. It's wide range bar, it moves up, what we call red bars ignored, and one bar that closes at the high. And so this is one that I'd be willing to press the button on in the first minute
Yep.
because it's so clear as to, what is in. Would this give me some reservation? Yeah. But, one of the things that we would look at and what, is called a top-down approach, I would also be looking at what are the SMHs doing? Is this showing relative strength or weakness? So
Yep.
that's your broader market. SMH is the sector that this is in, semiconductors and comparison. In addition, when we talk about gaps, and I'm sorry, I don't know if you have a slide on there, Dan, but this is what's called an end of day base. So part of our gap strategies and any pre-market trading that we would do and analysts of or gaps, we would look at what happened the prior day. So even if this could be a strong up day on the daily chart, but we'd look at what did it do at the end of the day.
Yep. Yeah, we have a good example of that. So Greg, this is right out of your advanced gap strategies course, which we're going to give you as much information in the next couple of minutes as we can with great examples. I don't know if you want to run through it here or just jump to this page.
Yeah, it's fine. It's fine. So I can go whatever quickly. So all of this is what's on the next slide. And so we have to create a trading plan, which gives us rules and guidelines as to what we should think. Well, we call them a thought building process. And so these are part of the thought building processes. Right? Is it gapping above or below support or resistance? That's the starting point. It doesn't tell me what to do. But if it's gapping above resistance, well, that's bullish. Did it gap or create a shock? Well, what does that mean? We'll get to that on the chart. Did it break out or break down? Is it a continuation pattern? This gives me guidelines. Is it the beginning of a move or is it the continuation of a move? Both of those suggest follow through and a bias that prices will continue in the direction of the gap. Now, if that happened and the prior day was a shock, that's even more powerful. Right? Well, if it break out or break down, it's clearing resistance. So that should be happening. Is there a reference point of support or resistance nearby, or is there a void? Well, just because prices took out resistance, that doesn't mean the next resistance area isn't right there, which is going to be, a stopping point. I want to consider that. Or is there a void? Again, it gets to me, not get to me, but it's interesting to me that a lot of people, when we explain this in these MT Lives, it still doesn't come clear to them. They don't get the concept. And basically it's, what you're seeing is, let me an analogy. If you looked at a parking lot and there were no cars in it, that would be a void. Versus if you went somewhere to a train station and full of commuter cars and they were all lined up there, that would be like you couldn't drive through it. So a void is a lack of support or resistance. You'd be able to go through it. It doesn't have.
And I use the football analogy for little Johnny. How many overlapping football players are there? Are there 10 defensive linemen or 2?
Yeah. What's going to stop it? And, what gets in the way are all the indicators and trend lines and fib lines and all of this stuff, horizontal lines at whole numbers and 50 cents and all of that gets in the way of looking to the left. Relative strength to weakness. Well, is it gapping up and the market gapping down?
AMD, yeah, relative strength.
Right. Is the size of the gap ideal? Well, is it gapping up just above resistance, Or is it gapping like, a mile above resistance or maybe it's gapping so high up in it and into a next resistance area where it's likely to fall back down? The intraday price structure, like I said, was there an end of day base, meaning it's starting out from there. So when you look at the daily chart and you look at another daily chart and they look the same, it doesn't mean the intraday structure looks the same. So as an intraday trader, you have to take that into consideration. So here's an example. Everything I said. And so what we see now is, hey, it was a topping tail. It was a bullish consolidation, but the topping tail would make us think, hey, if it breaks below this base, it's going to go down. Here's the void. But it gapped up above the base. So there was a little bit of a shock. And now, how do you take advantage of that? Well, this green line right here is this red line. So part of what's one of the gap strategy is just applying technical analysis 101, meaning what was resistance should become support. So as prices, here's the open, and came down into support, what was resistance, I look for a pattern that confirms my bias that this bullish gap with a shock should go up, and I've got a 3-bar reversal there. That's a buy setup. And you look at this and say, well, it's in the middle of nowhere because, well, here's the gap fill. And we're not even looking at what the pre-market data was, but on the daily chart, this is where it should stop. So you draw a line on your intraday chart, connecting this to here, and you wait to see if it pulls in. And it could go a little below it, but that's why you got to wait for the confirming pattern. And
just to illustrate something I said earlier, so this would be a tier 1 gap trade for me. I put it in a 5-minute chart, Greg, depending on, how aggressive, the smaller you go, the more aggressive entry you want. And I'm waiting to see if my bias comes to fruition. And so in this example, and in all these examples we're showing you, the answer is yes. But let's say hypothetically, it gapped where it did, and then it just came crashing down to $68. I would say bias didn't come to fruition, and I would just delete it and go on to the next one. So that's what I mean, tier 1. I'm watching it at the market open within the first hour to see if it meets my bias and if I get a tradable entry. That's what we're sharing with you today. So here is your tradable entry to trade this gap trade. And, depending on your time management and how much time you're going to trade in the morning will dictate how long you're going to be in this. But another point I'm going to be illustrating over and over again is you can use the market open to enter this bullish gap trade with the full intent to hold it as a swing trade. So you could get on board right here, put your stop prior bars low, and go to the golf course here at 9:38 because it took 4 bars to get in. So just keep that in mind as we go through these. So here, gapper. So I got to start with a strong uptrend. Slop, 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 but it's a strong uptrend, 20 above the 50. Okay, I have a gap breakout. It's on my tier 1 interest list. Many of these I have 15 just so you can see what happened throughout the whole day. I personally use a 5-minute window to get on more aggressively. But show them. This was
I'm showing them the same thing, that it's a different chart.
Right.
So it's different, but the same. Right?
Exactly.
So, this was in an uptrend and it gapped above this resistance. you don't really have a shock bar here because it's not a topping tail. So it wouldn't meet that criteria of a shock bar. It doesn't mean it's eliminated. It's just a way of measuring, is there all 7 elements there, or is there 5, which makes it good enough. So it's in a nice uptrend. I assume there's a void. I don't know what's over to the left here. We definitely have to look. It's $120. That could be a potential target because those kind of, whole number things kind of play in. But my bias is it is a relatively small gap. It's a bullish gap. And so pulling back, what was resistance is support. And then I apply what I call bar by bar analysis. And, and that's too wild and whippy. There's another bottoming tail bar. That green one is an action point because now we've got, remember with a strategy, not strategy, but we showed a slide with different charts. That's what we call a 180 reversal. So now I've got a 180 reversal, these red bar to green bar, after bottoming tail bars in an area of support with a stock that's in an uptrend with a bullish gap, and it was consolidating for a while. I am assuming there's a void up above. And so now I think press the button and see what happens. Now, there's a little bit of a heart pounder because it's like, what the hell? Where'd that red bar come from? I don't know. For whatever reason they sold. But this is why I come up with this idea of bar by bar analysis like a few decades ago. That red bar, I'm exaggerating, but would have given me some heart palpitations, and I probably would have sold. And then realizing after retrospect that sometimes red bars are ignored. So one of the things in my thought process is, well, what would have to happen for that red bar to be ignored? Well, to be ignored, I need a green bar. Dan calls that a bear sandwich.
Yeah, continue.
Green, red, green, and they're big bars. And so now my heart palpitations go away because now I've got a confirming bullish pattern in alignment with my bigger bias. And so none of this gives me any pause until the red bar.
And if you were day trading, then you'd just be in trail mode. If you're swing trading, stop accordingly.
Right. I'm going to take half. I'm going to do whatever.
Mm.
My management strategies.
All right, there's your shock gap.
Same thing. Right, where we got, there's your shock. Because, well, see, this was on support. We don't have the pivots marked here, but that's a pivot. What some of you were saying, what's a pivot? Simple. It's a bar called 3 higher lows to the left and right. So it creates an area of support. So it came down on here. So I was asked, what would I think tomorrow if I'm looking at this stock? And I'm like, well, that looks like it's going to go down, but it's on support. So I don't know. I'd need to see what we call a 1, 2, 3 continuation pattern to consider that long. But now it gaps up above all of this resistance. Same story. It doesn't always work out this way, but these are great examples. That bottoming tail bar is down here.
Yep.
And it happened at around 11 o'clock. It didn't happen at whatever in the first few minutes, but and this was something that's not playing out here today. It did for a little while. And pre-market, my bias was we look at the charts, we look at the futures, and I showed where support was, and we looked at the futures, and I said, okay, this is where the S&P futures would need to come down to for a long setup. They eventually got down there. And then the 5-minute began to bottom and it popped up again. And now I see it's broken down after that initial pop up. No, now it's come back down again. So, bears are in control, but that support reference point, just looking to the left, that simple concept of looking to the left. It's like, okay, this is where buyers are going to be. And they showed up and just turning to look, it's not that far off of it. It's still in that same area, but things are erratic here. But same idea, what was resistance should become support. And, so Dan has moved over here. I'm just looking at this chart and I'm like, okay, there's a pivot. There's a pivot. If you look to the left, right, where is my, yeah, if you look to the left from those pivots, that's where a turn should occur. Now here was an attempted turn, but it couldn't actually make the full turn. See the bottoming tail bar? So buyers did show up there. Now as it comes down into this area, it gapped down. You see here, this bar, it opened up near the prior bar's close, and this bar opened up near the prior bar's close. So the gap down into an area of support after multiple days falling down, common sense tells me buyers should be willing to show up there. And then we just wait to see, do we get a confirming pattern? And so this would be the beginnings of a turn. This would, maybe not initially, Dan, I don't know. We could look at that maybe as a call.
Well, you're talking about a different gap down here, but where this arrow is I got two slides here. So this is bearish consolidation. Couldn't get, and that's why I have a blue rectangle here. It's a bearish consolidation in the lower half of this bar, and I still have room to fall. So this is the void concept. So right here, look to the left, and it's a momentum move up. That's what a void is. There's no overlapping bars. So our support is this prior pivot low. So this is a tier 1 now, bearish gap trade in the morning based on the gap. So Greg, you take it from here. Here's your definition. End of day base and boom.
Yeah. End of day base. What does that mean? Well, so you got a situation here where prices went down throughout the day, and then they went sideways all afternoon. That's an end of day base. So looking at the daily chart.
Right there.
Right. Well, I was going to draw it down. Let me do my art. Right. We would put a bar like this. Right. This is what's inside the big nasty red bar. So it went sideways all afternoon, basically from 12 o'clock to 4 o'clock. So somebody was accumulating there at the bottom of the red bar. I guess assuming maybe it would gap up higher because they think it's extended. Maybe their 533 short-term stochastic was oversold, who knows what. And so it gaps down. So gapping down from a base, this is igniting. There's a void, but it's igniting. But it's a strong indication that it's going to continue to go lower. How are you going to get on board? Well, this one didn't rally up into here. So if you need money management strategies, if you short it, it's a 15-minute chart. You short it under that bar's low. What I would be telling you is, do a third or a half position with a stop up here, and then look to add it to it at the appropriate time, which could have been, a 30-minute low based on the 15-minute chart.
So this is a great example of trading the open for an hour, hour and a half before you go to golf. If you have software that can just trail, this one would have worked fantastic because it's so weak. Or you enter as a swing trade based on this, stop prior bars high. You come back from playing golf and you're like, beautiful, beautiful day I had, beautiful entry. So this is Greg's TC 2000 page for scanning gaps. And I don't know if you want to talk now or we will when we switch to live charts.
Yeah, so there's a lot of information here. The initial information is it gapping up or down? Right? Gapping down, gapping up. Is it gapping below a bullish bar? Is it gapping above a red bar? Shocks. You don't get too many of those on a day-to-day basis. And then through here, these help you with not only from the initial gap, because here I'm just interested, what's the percentage size of the gap? And then I have to look at the chart. But later in the day, what I can see is, did it end with a bearish bar or a bullish bar? And then I can sort this by volume to see which is more active. So this other information is helpful in the latter part of the day for sorting these columns for bullish wide range bars or bearish wide range bars. And then throughout the trading day, what I look for is, let's say on the bearish ones here is, the change. It's hard for me to see these two. I would, change from the open, and is it below yesterday's close? So if you've got 3 red check marks here on a bearish gap down, that's going to be a good one looking at for intraday later in the day, because it's staying bearish. Whereas some of these, they get back above the open. It's just a quick way to look at, which staying very bearish or which kind of mediocre as to whether they're bullish or bearish. And you can sort these and get a pretty fast overview of putting you in the ballpark.
Another great example of using software to help you. But we purposely give a 7-day trial to our live green trading room. And it's just a fantastic place to learn, to watch us in action, because everything we're talking about right now, you all are seeing in real time if you're in the green trading room with us. Greg gave a link on YouTube. We start our pre-market analysis and building a hit list at 9 a.m., which we show on YouTube, and then we shut it off at market open, and then we're trading the day together. So it's a great time to see what we do in real time. We scan these, we pull up this chart and we're scanning together. We're showing you how to find money and using our approach.
So look, just for the room, some of you, I know there's a lot of people starting out, and they might say, well, look, $100 a month, maybe I can't afford that. Well, maybe you shouldn't be trading, honestly, but for $7, whether you stay with us or not, it's 5 days of like a seminar. If you go there with the attitude that you're not going to trade and you just listen, it'll be the best $7 you ever spent. Believe me. Just to hear the education and the trade management and all of that. So many people, and I was no different starting out, you're just focused on money. I've got to make the money, which ultimately is the goal. But initially, whether it's me or you have no concept of what you're doing. So you need to not put the cart in front of the horse. And my point here is, take the $7 trial for the 5 days and just listen and ask questions.
Yeah, no, that was a great addition. Thanks. So the only reason I'm showing you this, I'm using intraday market internals for day trading turning points, number 1. And number 2 is to have a bias based on our day trading market internals that are supporting our bullish or bearish bias. Now, this tick is not all the ones we use, but we don't have enough time. But that's, as a morning day trader, we look at market internals, and we look at the AD line, we look at the tick, we look at Greg can summarize a few others, but that gives us the additional comfort of milking our open positions, and then when things are getting extreme, looking for turning points.
Yeah, this is like the best intraday for the moment market internal gauge. This morning, as the markets were falling close to an area of support, all of a sudden, one of these tick extremes down below -1,000, and I pointed it out to everybody in the room. And while there was a little bit room to go to reach the support, it communicated that we were close to the end of the move down in the short term. And so then you start to look for patterns like this. You know, there's a wide range bar. It's just the beginning of a turn and slowing momentum, and then a higher low, and then an igniting bar. So as I said, everything is a tool. How you put the tools together creates a strategy or a thought process. And this is part of a thought process, whereas, you know, I see, even if I saw a wide range bar like that after moving down, I'm going to be thinking it's near the end of the move. And then I see a tick extreme close to lunch. And I'm like, yeah, that's probably the end of the move. Now, that doesn't mean go long. It just means that's a thought. It's near the end of the move. Then there's a retest. And as a day trader, that could have been a scalper strategy right there. And then again, you put it together, and you know, the latter part of the afternoon here, that's the end of the day there. But so this was a relatively bearish day because it really didn't lift up very much. At the end of the day, there was some short covering.
Right, yeah, but it's a great tool if you're trading in the morning and you see this and you see a 180 reversal, take the money on your short and head to the golf course.
Mhm.
All right, so this is what I'm going to show you here, and then we're going to move to real charts like we always do. Even for day traders, you can buy or sell options as a day trade if the underlying is liquid, like the index ETFs, you know, some of the FANGs, NVIDIA, AMD, Bank of America, they're all very liquid. And we use the same technical approach, well, to trading options, which means I need a bias before I even start looking at an option trade. So these are some of the same similar pictures we showed you earlier, and we're going to sell a put under support when we see the pattern and we see the reversal, and then we buy it further out of the money put. The difference is a credit going into your account, and we can do this on the same day of expiration for the index ETFs, and then obviously if it's a stock, you can only do this on Friday. But the spiders, Qs are our favorite ones to do this on. And so then we see if we have an intraday confident reversal. So here's spiders. This was a while back. It got creamed. Today we're talking about gaps, right? And trading the open. There you go. There's a bullish gap into a big wide range bar that's down a bunch on major supports. So you got my attention. I'm putting that in a 5-minute window. This one's 15. You see the gap up. You see it came down. You see the bottoming tail. You see a range expansion bar. I'm good to go. I think that's the low for the day. So we go to the option table, see how much money we can make. We sell them under support. So we sell the 258. And on 0 DTE trades, I just go as far out as I need to only pay a penny, because I don't care about the penny. I'm only doing this, to have less buying power if you are concerned about that. So we took in 45 cents a share. If you sell 10 contracts of this bull put credit spread, then you made $450 as long as it closes above 258. Let's see, this reversed at noon. You got 4 hours of risk, you made $450. And we also day trade long options, and you can do it in the morning or the afternoon. Here's a special that Greg put together. You got the link there for him, but you can go to mastertrader.com/May deal, since this is May. We have our top-down approach to trading the markets, which is fantastic, particularly for people new to the markets. Your 8-year-old Johnny will love that course to get him
Everybody
interested.
with it starting out, because it shows you the beginnings of our thought process of being, hey, what's the big picture here? Right. First of all, it explains so you understand the structure of the markets. Then it's like here is different major market indices. Here are sectors within them. It breaks it down, right? Top S&P 500, NASDAQ 100, whatever, Russell. Break it down into little sections. S&P 500. Here's energy. Here's telecom. Here's so on and so forth. Technology. Here are the stocks within there. Here are patterns, how to interpret trends and patterns, how to interpret using option strategies. So it's a fantastic starting point on understanding how we start with the big picture and narrow it down to how do we make money. So within this special is the course, 9 months of weekly lessons. You're going to get a lesson every single week on different strategy, whether it's moving averages, whether it's option strategy, candlesticks, whatever, for 9 months every week. Then 3 months of the advisory letter, which comes with text alerts, the member area, everything is documented in there. And things are updated, throughout the trading day to your telephone or in your desktop. You could have it on both. And so we don't know what you're interested in. So made the package. Well, here's the weekly options letter for the next 3 months. Here's credit spreads, short-term credit spreads, expire in a day, 2 days, 5 days, 8 days, what have you. Coachings every month. Dan is doing one next week. So if you sign up, Dan's going to be doing a live coaching session on Tuesday. I'll be there, but primarily it's going to be options and pattern strategies, what's taught in the course, and explaining how to put that all together, as well as taking your questions and answers. The layouts that we showed you some of it, all of those layouts with scans comes with it, complete access, $197. You can't go wrong, for sure. And so I posted the link there, but you can type in there mastertrader.com, May deal like that, and it'll take you to that. You can click on it, and at the bottom there, you can go right to the checkout, and everything will be in your inbox. You get an email within a minute.
Awesome.
Yeah.
We went a little later today, but let's
we-
pull up the charts for 5 minutes, and we always like to save time to answer questions, applying anything we learned today using real charts, and hopefully have a setup that we can watch to enter in the afternoon.
So Pan W, that was a nice gap.
And yeah, we sold
Sure.
put spread on that today.
Yeah, and so here it is, right in this list here, and it's in. So these are a little bit different criteria for the gap. That's why there's a different list here. But anyway, you can see it's in the list, and 3 green check marks, which means it's still doing good today. Which to me, just initially, just looking at that, this is a good one potentially for swing trades. So you need to look at the pattern, and of course, at the end of the day, where is it at the end of the day? Does it hold on to the gain? It's showing relative strength to the broader markets. Because you can see, I can just turn this off here and put QQQ, and you can see the broader market. It's been going down. It's retesting and bottoming here, but this is doing amazing. And this was a gap up on earnings. Remember, I said it earlier in the session, I said these gaps, we don't want to see them get filled. So this, and this is kind of a wide whippy base, but if this can go sideways for a couple of days, this debt ceiling BS gets worked out, this has huge potential to go higher.
1, 2, 3, big beauty.
Yeah, I'm looking where the hell is, weekly. Well, I don't know a huge potential, but look, this is now on a weekly chart. If it closes like this on Friday with this pattern, it may consolidate a little more, but this should make new all-time highs, I think. So that this high here may be an initial sticking point, but that should make new all-time highs. So I think this is a great one.
Yeah, we trade, it was on our hit list at the market open. We sent it to Telegram pre-market saying, this is a tier 1, we're gonna monitor it for you, and then we sent the trade in real time.
Right, so this one, whatever it is, see, I knew this one wasn't anywhere near as good as PIN-W because it's got a red check mark over here. So it gapped above some resistance and, you know, it was a positive gap, but it's down below the opening price, which is, you know, I don't know that it would look like this, but initially I know that it's not doing as well as that one. Here's 3 green check marks. So this one's doing good, but it's not a PIN-W, but it's certainly a bullish gap that's holding on to its gain. It's near the high, and so it needs to form another pattern. KSS, is it on the list?
I can answer that. Well, maybe it's talking about your list, but it was on my tier 1 watch list, Chris, this morning. And remember, I said a couple times, put it in a 5-minute window and see if the bias sets up the way I thought. And the first 15-minute bar came crashing down. And I told the green room, no, it's off my list. It came down too hard.
Yeah. But there's the intraday data, which was going sideways there pre-market. So it looked pretty good. However, you know, so we always look to the left, and, you know, it wasn't the greatest since it had that overhead resistance. It didn't have a crystal clear void, but, you know, it didn't mean it couldn't go higher in the short term, but, you know, markets caved in and it caved in, but PIN-W didn't. One has to look at spot, which was a gap down and gap down in an uptrend. So this isn't one to be thinking about shorting. You know, and this wasn't a shock either because it had a topping tail yesterday. So this gap down into support. And let's just look at an hourly chart. And we could take the pre-market data off of here. So if I check this, it only shows that to me pre-market or aftermarket. Look to the left. It works. Looking to the left works on intraday charts. So I would not look like at this for a short, even though it was gapping down, because it's in an uptrend. And look at the pivot. Look at the green dot. It gapped right down onto support. So what you need to do, if you were going to think about shorting this, which I wouldn't, there'd be better things out there. This hourly chart is now at a point where it's rolling over, trying to roll over. This may not look like a green bar, but let's find stuff that's in a downtrend, maybe to consider shorting. Rather, you know, so something in a downtrend on the daily and moving up into resistance would be much better. But these are all negative gaps, and you can sort these by bigger gaps, percentage gaps. That was a big gap. And so you got to go through the list. What we're showing you here, that one is somewhat interesting. And remember I showed you looking to the left, this is where you would look to see, could it make a turn? So when it gaps down and they rally up into here, you mark that off, and now you start looking for weakness, which really didn't truly develop until a little later in the day there. So that is what you do at this, and then in the afternoon, you then go and look at here, see where the markets are at, and we look for swing trades. But we'd go to this page. I'd look for what's in an uptrend, what's in a wide range bar, what's a 1, 2, 3.
Thank you for listening to Master Trader Live.
We provide these
If you
with the
love the
course.
show, we invite you to share
We'll be
this
back
video on
next
your
week.
timeline or tag a friend you want.
Good trading, everyone.
Stay educated.
Email us with any other questions. Thanks.
All right.
Sent right to your inbox. We're live every week, and you can subscribe to the channel and press the bell to get alerts. If you've enjoyed the event, please give us a thumbs up. Just visit mastertrader.com. That's mastertrader.com.